Hi guys, welcome to this Money Control live stream. It's a Thursday morning and the cues coming out of global markets are fairly mixed. Yesterday we gave up that 25,000 mark. In fact, there was weakness in trade yesterday on the back of tepid global cues. But this morning we've seen Wall Street notch a fresh record. Asian markets, however, are a little iffy given the fact that they are waiting for comments from the Chinese housing minister in terms of more stimulus measures to revive the property market there. So GIFT Nifty hinting at a mildly higher start, but 25,000 we are looking to reclaim that level today. Mind you, it's also the weekly expiry on the Nifty. So expect some bit of volatility, but we'll have to see whether or not we can break out of that range this week or not. But lots lined up over the next 35 to 40 minutes. We'll be talking about all the earnings to watch out for and the earnings that came out post market hours yesterday. Also, all the other stocks that will be in focus today, and your stock related queries will also be in focus. If you have any queries, keep them coming in. We'll try and address them as well. But quickly take a look at the top headlines at this hour then, starting with what happened in the global markets. Dow notches record close for a second time this week, recovering all of its Tuesday's losses in a strong session. Meanwhile, Asian markets trade mixed, while the GIFT Nifty is suggesting a mildly higher start for the Indian market. The crude sell-off continues as fears over a supply disruption in West Asia ease. Brent crude trades below $75 a barrel and US crude also slips below $71 per barrel mark. Bajaj Auto's second quarter numbers are largely in line with estimates. The company reports its highest ever quarterly revenue and EBITDA, aided by strong volume growth. However, management commentary on festive demand remains cautious. And in key earnings to track today, Infosys is likely to report its second quarter of strong revenue growth. Wipro, on the other hand, is expected to post flattish revenue growth after 6 straight quarters of decline. But of course, also watch out for any kind of bonus announcement from Wipro. Axis Bank and Nestle, these are the other earnings to watch out for today. Alright then, let's take a look at the cues then for trade. 10 minutes to go for the markets to open. Yesterday we saw a fair bit of volatility in the last hour of trade. The Nifty gave up that 25,000 mark. But what really lent support to the index were index heavyweights like HDFC Bank and Reliance Industries. In the last hour, we saw support coming in from these two heavyweights on the Nifty 50. The broader end of the markets were outperforming. Breadth, was in favor of advances yesterday. Breadth has been fairly even Stevens in the last 4 to 5 sessions. So that trend continues. And, yesterday, of course, the breadth was in favor of gainers. Autos extended the fall. They were on the losing end day before yesterday as well. So the likes of M&M, Hero Moto, Tata Motors, these were among the top laggards on the Nifty. But on the other hand, we also had asset management companies do very well. HDFC AMC, after earnings, it had hit record high, and the growth outlook was also revised. So reacting to that as well, HDFC AMC, among good stocks that got gained good traction in yesterday's session. If you look at the options cues, put call ratio fell to 0.74 vis-a-vis 0.77 in the previous session. Looking at the F&O ban list, no new additions or deletions, but quite a few counters will be in F&O ban today. The likes of Bandhan Bank, Chambal Fertilizer, GNFC, Granules India, Hindustan Copper, IDFC First, IEX, L&T Finance, Manappuram Finance, Nalco, PNB, RBL Bank, SAIL and Tata Chemicals. So the list is extremely or fairly long as to the number of stocks in the F&O ban today. In terms of fund flows, foreign investors remain net sellers as they have been throughout the month. 3,400 crore rupee worth of stocks sold in the cash market. On the other hand, DIIs continue to lend support. 2,200 crore rupee worth of buying coming in the cash markets. But on that note, let's quickly get on board our guest for today. Joining me is Chandan Taparia of Motilal Oswal. Chandan, always a pleasure having you on the show. But the range on the Nifty has been between 24,900 to 25,200. We have 2 more sessions to go for this week. Today, of course, being the weekly expiry. What are your thoughts? Do you think there is a possibility that the Nifty can break out of that range, or you expect the markets to be pretty much range bound for the remainder of the week?
Nifty index has got stuck in between 24,900 to 25,235 marks from last 6 trading session. Before that, it witnessed some selling pressure in the last 2 week and now hovering near its 50-day exponential moving average. The good part is that global markets are holding the gains, but this time, after a long time, the Indian equity market are not performing better than the global indices. But the good part is that India VIX is near 13 levels. However, put call ratio slightly declining, which indicates kept upside, but supports are intact and major trend of the market remains bullish. So we believe that 24,750 could act as a support. Nifty needs to hold about 25,000 for the day. Then with support of 24,750, we can see an attempt to give the breakout about 25,250. And if Nifty manages to move beyond 25,250, then there will be the next leg of rally in the market. So as of now, the play the range between 24,750 to 25,250. About 25,250 will get the conviction for the bullish or aggressive stance in the market.
Okay, that's the view on the Nifty. But what about the bank Nifty? 52,000, continues to be elusive for the Nifty Bank Index. Do you expect, 52,000 by early next week, if not this week? And Axis Bank will be reporting numbers today. Slower loan growth and, margin pressure are likely to hurt growth. There could be a surge in provisions as well, which will weigh in on profit growth. And, Motilal Oswal, I was reading one of your reports on, what the expectations are looking like. And, expectations are that GNPAs, asset quality could worsen slightly, and there could be a slight uptick in GNPAs as well on a quarter-on-quarter basis. In terms of the chart setup, how would you compare HDFC Bank, Axis Bank and ICICI Bank at the current juncture? Yesterday, HDFC Bank was among those counters that provided support to the index. So, do you expect that strength to continue? And Axis Bank ahead of earnings, is there a trade?
Yeah, Nandita, that's a brilliant question. If I look at the Nifty, that is just flattish on week basis in the entire week, but Bank Nifty is up by around 1.25%. So banking index, which was earlier underperforming, witnessed some resilience or outperformance in last couple of days. The Nifty has been moving in a range of 300 to 400 points, but Bank Nifty is shifting the base to higher zone. Just 8 days back, it made bottom near 50,200, and now we are near 52,000 marks. So till it holds above 51,650, overall we are expecting banking index to head towards 52,350 to 52,500 marks. Now looking at the Axis Bank, Axis Bank also witnessed some profit booking decline in last 12 days, corrected from 1280 to almost 1145 marks or 1130 zone. Even from last 4 days, it has been making lower highs, lower lows when index has been consolidating. So underperformance is clearly visible. Those who are holding, they need to keep in mind the major support of 1120 level. If 1120 is broken, then there will be the negative stance. Otherwise, above 1180, it can see an upside move towards 1240. So as of now, the structure is weak, but we are near a major support of 1120. So one need to keep this level in a mind for any kind of position in the stock. Now talking about the stock wise in other banking space, I believe ICICI Bank has bottomed out with support of 1200, 1215 zone. It requires a breakout about 1265 to commence the next leg of rally. And if Bank Nifty has to move, then ICICI Bank has to take support. Talking about HDFC Bank, it witnessed a roller coaster ride in last couple of weeks. But the good part is made bottom near 1613 level. And now supports are gradually shifting higher. Immediate support goes at 1660. And with that support, HDFC Bank can head towards 1750 kind of level. So positive view on HDFC Bank and ICICI Bank. Axis Bank is near a major level. Bank Nifty, a small follow-up can lead to 52,350 marks.
All right, that's the view on the Nifty Bank Index. Of course, particularly for Axis Bank, the chart setup not looking all that great at the current juncture. But, I want to draw your attention to another index, heavyweight Reliance Industries. The stock was among those that lent support to the index yesterday, but, it has been fairly weak. If you see the stock performance of the last few weeks, but there has been news flow around this company as well. Numbers came out, and yesterday it has set October 28th as the record date for the bonus share eligibility, which means shareholders need to hold shares of Reliance Industries before by October 28 to be eligible for the bonus issue. Shareholders have approved the bonus issue and increased in authorized share capital, and the company will be issuing bonus shares in the ratio 1:1. Mind you, this is the sixth instance of the company issuing bonus shares. Earlier, it has done so in 1980, 1983, 1997, 2009, 2017, and now in 2024. The stock has corrected quite a bit, 15% from its peak. But do you see sense, or do you have any sense of where the charts are headed? Do you think there are early signs of revival? And we have a couple of queries also coming in on Reliance Industries on our live feed as to what a good entry point would be and what are the kind of targets to be expected over the next 2 to 3 years. Abhishek Singha has written in on this one. So any thoughts on where Reliance is headed?
So yes, Nandita, talking about Reliance, it has been correcting from last 12, 13 days, from the top of 3065 to now below 2700 zone. The stock is trading at its 9 months low level. Even on the weekly scale, it has been making lower top, lower bottom. So corrective move is clearly visible, but we may approach to a key support zone, and that level comes near 2600 marks. So I believe 2600 zone could provide a major support to this heavyweights counter. Towards 2600 zone or with the support of 2600 zone, one can attempt for the long side or positional for the target of 3050 to 3100 zone.
Okay, that's the view then on Reliance Industries. Of course, we are, Network 18 is a part of Reliance Industries, so please consult with your financial advisor before, taking any call on Reliance Industries as well. But of course, we're getting the first ticks on the Nifty. Then we have reclaimed that 25,000 mark. It's a fairly muted start, but with a positive bias. Sensex as well up somewhere around 200 points or thereabouts. The Nifty Bank Index is also opened with a positive bias. 100-point up move coming in there. 51,900. We have reclaimed that level. We'll have to see whether 52,000 happens today or not. In terms of other sectors, want to see what the auto pack is doing, because Bajaj Auto reported numbers after market hours, and yesterday, in fact, for the last few sessions, we've seen autos, stuck in the slow lane. Today, let's see, autos are in fact, trading with deep cuts of 1.5% or thereabouts. That's the, other sectoral laggard aside of the FMCG pack. That's also witnessing some bit of a weakness. But what's doing well is the IT pack. 0.6% kind of an up move coming in on the Nifty IT index. Remember, some of the mid-cap IT names will be reporting numbers. Infosys will be reporting numbers. Wipro will also be reporting its second quarter numbers. So IT pack in focus this entire week. We had TCS, HCL Tech also report, earlier this week, and clearly the shares were reacting to it. Aside of IT, metals also in focus. Good numbers coming in from Alcoa, of course, and we have Nalco and Hindalco that will be in focus. Pharma doing well, PSU banks also showing strength. So all in all, aside of autos, FMCG and realty, all of the other sectors are doing well in trade. But let's quickly take a look at the individual movers on the index then. As I mentioned, metal names will be in focus. So Hindalco among the top Nifty gainers. You had L&T as well. That stock is the top Nifty gainer at the current juncture. Sun Pharma, ICICI Bank, Reliance Industries 1% higher on that stock. Infosys as well, 0.9% kind of a gain ahead of numbers. Wipro will also be in focus. Remember, the company or the board will mull a bonus issue along with its numbers today. So that stock will be in focus. SBI, Cipla, HCL Tech, JSW Steel, these are some of the other counters that are doing well. On the flip side, you have Bajaj Auto. That stock is down somewhere around 7% or thereabouts, if I'm not mistaken. Yeah, it is the top Nifty loser at the current juncture. So, 7% down on Bajaj Auto. The numbers have been in line, but the commentary around festive demand has been a little cautious. Perhaps that is why the stock is seeing such a knee-jerk reaction of 7 to 8% kind of a cut coming in. Hero Moto mirroring what Bajaj Auto is doing. So 4.5% downtick coming in on Hero Moto. So top 5 losers on the Nifty are from the auto pack. Bajaj Auto, Hero Moto, M&M, Eicher Motors and Maruti. All of these stocks are in the red. Coming to you, what are your thoughts on Bajaj Auto? It's a 7.5% downtick. numbers came in largely in line with estimates, but of course, I think it's the commentary that has weighed in on sentiment. But what kind of a level would you be watching out for? I was just going through some of the brokerage reports. One brokerage had cited a target price of somewhere around 7,600. Another one had, set out a target price of, 13,000 rupees and beyond. Where do you expect the stock to head from here?
So, talking about Bajaj Auto, the stock has seen a corrective move in last 2 3 weeks after making the bottom at 12,700 zone. Now it's below 11,000 marks. After a long time, it has broken its rising support trend line, gone below its 50-day exponential moving average. So, I believe short-term pain will be there because this counter is slow and steady head to the new high territory. But I think today's the data setup and price structure indicate some sort of concern in the counter. So I believe it may open the downside towards 10,200 levels, and that may be a good level to accumulate the counter for long term.
Right. What about the likes of M&M and Maruti? Any your preference here? Because I think it's the entire auto pack that has dragged the markets today. The Nifty has also given up its opening gains, although no big cut coming in yet, but it's near about that 24,950 mark.
Nandita, Nifty Auto is forming a negative price pattern. Usually, Auto does well at the start of festive season, but I don't know what is the reason that Nifty Auto started to form the negative price pattern. Technically speaking, it is a head and shoulder pattern which has very simplification. So if it doesn't recover in next 1 or 2 days, then entire auto basket can correct by 3 to 5%. And in that scenario, most of the counter will be under pressure. So I'm observing such kind of pattern after a long time, and especially in the heavyweights or the safety sector like auto. So M&M is also forming the double top. If it holds below 3,000 zone, then it may open the downside to 2,900 marks. If you look at the Maruti, here is also we are witnessing lower top, lower bottom. Not expecting bigger fall, but at least it can go to 11,900 zone. So we need to keep these sectors on radar. Some sort of negativity and the negative price pattern is on the verge. So we need to focus and trade or track them closely.
Okay, that's the view then on the entire auto pack. A big drag in today's session. But from auto, what shift focus to IT as well. We'll talk about Infosys, Wipro in a bit. But L&T Tech, that's another stock that's on my radar. Numbers came out. Constant currency wise, it was fine. Constant currency revenue wise, but margin wise, it was a miss. And we are seeing, an almost 2% kind of a cut coming in on an L&T Tech. But looking at the stock per se, the stock has been stuck in a downtrend. If you look at the long-term charts and even on a YTD basis, there's not much to boast about, just about a percent or so. How would you really look at L&T Tech? Are there any chances of a revival? What are the patterns you're spotting, and how does it look? It's somewhere around 5,240 at the current juncture. Would you be working with lower levels, or would you see some bit of buying emerge at these levels?
I think the stock witnessed a recovery, but now the follow-up is not there. It recovered from 5,000 to 53.85, and now it's breaking the low, high rise, high low. So today's price is a concern. Now till it remains below 53.20, it can drip down to 5,000 marks.
Okay, and within the large cap IT space, of course, we know in the last 3 months, IT stocks have done extremely well. Infosys, TCS, HCL Tech, and the likes. We saw numbers from HCL Tech and TCS, but today Infosys is expected to come out with numbers, and it may outpace its larger peers in terms of revenue growth, and brokerages are seeing some bit of 4% kind of an uptick on the revenue growth front on a quarter-on-quarter basis. Large deal ramp-ups and demand in sectors like BFSI will be aiding top-line growth. Also, artificial intelligence, the ramp-up of digital initiatives, these are some of the other factors that may aid revenue growth. And there's a 90 basis point revenue contribution expected from the InTech acquisition that it, announced back in April. There are chances that guidance could also be revised higher, given the fact that the company has revised its guidance in 6 times in the last 7 quarters. Today, of course, doing well ahead of numbers. Would you look at this stock within the large cap IT basket for the next 1 to 2 months?
So, if I talk about Infosys, the stock has got stuck in a range. Multiple hurdles are clearly visible near 1975, 1980 zone. And it failed to surpass that zone after multiple attempts. So, there is a concern. But the good part is that supports are intact and slightly inching upwards. So, I believe till it holds about 1900 zone, one can hold the long positions for an upside move towards 1980. But if you ask about IT name, I'll focus on SCL Tech. I like that name. Major trend is positive, and I believe with support of 1820, it can head towards 1960 level. And Tech Mahindra could be other name. It gave the breakout, retesting the support. So with support of 1640, we are expecting 1750 kind of level in SL Tech. So I'll focus more on I'll focus more on the SL Tech and Tech Mahindra as IT counter.
Okay, that's the view on large cap IT. But then let's shift focus on all the queries that are coming in and try and take as many as possible. I spotted a query on Polycab on our feed, and numbers are slated to come out today. Kind of lost the person's name in between all these queries. But if you look at Polycab, Chandan, in the last 1 month, we've seen a 7% uptick. The stock did see some hiccups. It has seen some hiccups on the way, but on a YTD basis, the stock is up a good 30% or thereabouts. A mid-cap poster boy, so to say, Polycab. Today, it's trading flat. If you look at the 52-week high, that stands at somewhere around 7,600, just about 500 odd rupees away. Your thoughts on which direction it could take from here? 7,100. These are the kind of levels we are looking at right now.
So Polycab is comparatively one of the strongest name in the market, but at new highs, it has tendency to witness some volatile cues and the profit booking behavior. So already it rallied well by more than 10-12% in recent past, all the way from 6,400 to 75.85. But now finding some hurdle, so let it retest the key support zone. I believe 6,900 could provide a key level to the stock to get some stability as of now. So near 6,900, we can go for buy on decline stance in the counter for 7,500, 7,700 targets.
Okay, buy on declines. That should be the strategy on a Polycab. Shrikant Chavan had sent this query. Hope that answers your query. The next one, I want to take it up on a BEL, Bharat Electronics. This one has come in from Naveen. Wants to know what the strategy should be here. Defense stocks have cooled off. I mean, we speak about it almost every other day. But within the defense pack now, on the back of the kind of correction we've seen, do you think BEL is one of the ones that one should look at, or would you look at some other names?
So BL has got stuck in a range, respecting its rising, its falling slope trend line and finding hurdle at 50 DMA from last 32 days. So the stock is finding base, but momentum is required. It needs to hold about 290 marks. About 290, it can go high towards 300, 305. Apart from that, if you want to talk about defense name, then need to focus on counter like HL on decline, or can look at the stock like BEML with support of 3850. BML can head towards 4,050 marks.
Okay, that's the view then. But another query I want to take up is on BSC. Your thoughts here. Varsha Gajjar wants to know why it is falling. We've seen one of the brokerages downgrading BSC as well. Right now, BSC I think is perched at somewhere around, not being able to open the charts here for some reason. Yeah, it's perched at around 4,460 or thereabouts. Shares have been witnessing selling pressure. Would you expect more downside, and if yes, a good time to accumulate this stock?
So major trend of the counter is positive, and really I had given a bullish stance in the counter long time, starting from 600, and now we are beyond 4,400 marks. Just couple of days make it hit high near 5,000 levels. So major trend is positive, but as already the good part has played well in the counter, so require a hold. 4,100 could act as a major support. So still I'll go with buy on decline, but after some more decline, with support of 4,100, we can target towards 5,000 in the BSE Bombay Stock Exchange.
Okay, target 5,000. That's a positive view coming in on BSC. But Bajaj Finance, I can spot a query on Bajaj Finance on our feed. This one's coming in from Gopal Rastogi. The stock has been stuck in a downtrend, has not been able to clear that 7,000 mark decisively. Should one look at other NBFC names or should one buy on dips?
Nandita, the sector is finding pressure. It has been making lower top, lower bottom, trading much below its 50-day exponential moving average. We have seen a build-up of short position, and the stock is trading below its falling supply trend line. So all the data setup indicates the weak structure as of now, and I believe with hurdle at 7,050, Bajaj Finance can go down to 6,700 to 6,650 marks.
Okay, that's the view on a Bajaj Finance. Hope that answers your query. But very quickly, I want to just squeeze in a couple of more queries. I can spot one query on Alembic Pharma from Kishore. How's the entire pharma basket looking like to you? And within the pack, Alembic, should one, if one has some positions, should one switch to a larger one or should one stick to Alembic?
So talking about Alembic Limited or APL Limited, first let me talk about APL Limited. Major trend is positive, but from last few days, some profit booking is visible in the stock. As of now, the major support goes to 1120. Till it holds above 1120, look for 1300 kind of level. So this is what I believe in the Alembic Limited or Alembic Pharma. If I look at the Alembic Limited, it has been moving in a range, so no concern in that. But yes, Alembic Limited or Alembic Pharma can do well. May take support to get some upside swing in the counter.
Okay, that's the view on Alembic. But with that, we've come to the end of the query segment. But Chandan, before I let you go, what would you be, recommending for viewers with a 1 to 2 week time horizon?
Yeah, so Nandita, first step will be buy on State Bank of India SBI. After a long time, this stock has been uh, finding sustained buying interest. It has given a breakout with hold beyond 50 DEMA. So now with support of 797, this stock can head towards 850 zone. So SBI is the first name to go with during the day when Nifty is slightly down and selective stocks are doing well. Second name I can select on the Syngene. Selective pharma counter can do well. Syngene has recently bottomed out at 860, slightly moving upwards. Very positive price pattern on the weekly chart could drive the stock 2 inch higher. So with support of 875, this counter can go to 930 zone.
Okay, those are the recommendations coming in from Chandan. But with that, Chandan would like to thank you for taking out time and joining in this morning and sharing your thoughts with us. Always a pleasure, and I look forward to interacting with you again sometime soon. Okay, then on that note, let me bring on board our fundamental guest for today. Joining me is Daljit Singh Kohli, who's the head equity at Roha Asset Managers. Daljit, great to have you on the show. I want to begin by asking you, what are you making of the earnings season thus far? IT, it's been fairly mixed for now. TCS was a margin miss. HCL Tech was good. And they have also said that they are seeing some bit of improvement in the discretionary environment, particularly for HCL Tech. Today we have heavyweights like Infosys and Wipro also reporting numbers. And Reliance Industries also has reported numbers. So within, the numbers that have come out till now, what are your thoughts and where do you expect the outperformance to really come from for the rest of the earnings season?
Yeah, good morning. Thank your show. So, see, this FY25 will be first year after many 3-4 years of abnormal. No? So, since COVID time, we've seen every year there in some or the other normal events which have happened. As a result, earnings were impacted either on the positive side or on the negative side. No, in COVID year, you had no marketing expenses, no other expenses, and therefore your costs were very low. Margins went up. Next year, Ukraine war happened, all commodity cycle went haywire, and your raw material cost went haywire. Result, everything. Next year after that, it commodity cycle reversed. You again started making a lot of margins. So all these abnormalities in various 3 4 years, and this is the first year FY25 when no such event has happened. So which means from now onwards we will have the normalized earnings. So this era of 25 30% growth in a year, 25 30% minus in a year, all that is now behind. Now we will have earnings trajectory will be probably following the revenue trajectory. So in our estimates, if the revenues we are expecting for FY25 for most of the companies to grow in the range of 10 to 12, 15%, the earnings will also be between 10 to 15%. So that's what is the broader sense. Now, if you go by the reflection of that in quarter two numbers, which have just started, it is exactly in that line. If you see, most of the companies have started showing muted or 10 to 15% growth is not bad growth. But when you have seen 20% growth in the earlier quarters or earlier years, you feel that it is slower. No? So that is it's just a matter of
Hmm.
perception. In reality, companies are doing okay. And most of the companies, good part is in last 3 4 years, they have all learned their lesson well, and many of them have actually done optimized on their cost efficiencies. So we are looking at probably this quarter we will see around 10 to 12% kind of growth in the as in the earnings part. We are not expecting any blockbuster numbers from anyone, so it will be
Hmm.
kind of this range-bound numbers. As you said about the sectors which are likely, I think it will be pharma very clearly. Pharma has been doing very well. The ground reports, the international markets, US markets, etc., all of them have been doing very well. So we expect pharma as a whole should do well, both from domestic as well as international. Agrochemicals again can be sector will do probably well. Uh, One on the domestic side, we had good monsoon, we had the right season for them, and on the international side, this destocking cycle is probably nearing the end. So while volumes are coming back, prices still may not have come back. Yesterday's results also prove that. So we might see some, but at least volumes will come. That means the numbers will be upwards. On the
Right.
banks or on the sorry,
No worries. Just
yeah,
want to
please go ahead.
ask you about Bajaj Auto in particular. We are seeing a knee-jerk reaction on stock prices. Almost an 8% kind of a downtick coming in. Numbers have been fairly in line with estimates. In fact, profit and EBITDA, have been highest ever in a quarter for the company. What do you think has been, a major disappointment this time? Because two brokerages have given out divergent views, where Citi has a target price of 7,600 on the stock, and another brokerage, Jeffries, has a target price of 13,400 on the stock. Do you think for now, all the good news in terms of CNG two-wheelers, three-wheelers, and electric three-wheelers, new launches, do you think all this is already in the price and the stock is, staring at a steep correction here on? What are your own thoughts? And if you've seen the numbers, how do you really read them?
Yeah. So first disclosure, we don't own the stock, and this is not a recommendation on any stock. Second thing is on the if you talk of Bajaj Auto, I don't think there was any numbers were in any way better bad numbers. They were all good numbers. Now a small miss of 1% here and there from somebody's estimates does not warrant an 8% fall. However, it is a matter of expectations, no, and this is what probably we'll see in this entire earnings season. I'm expecting that most of the companies will see their exaggerated reactions either on the positive side or on the negative. Expectations are yet not normalized, no, we just talked in the previous section how the earnings expectations are going to change now after a long period. When you're seeing these changes happening, markets take their own time to digest that. To say that 20 30 basis point miss on the gross margin will lead to crashing of the company or their gross margins are just gone for a toss is not a right way to look at. However, because in anticipation of good numbers, in anticipation of this strong growth trajectory, the stock has already moved so much. So, which means that you have already priced in what was supposed to happen. Now, obviously, when that does not happen, so margin of error becomes very low, and when that does not happen, this leads to this kind of reaction. Overall view on auto, we are now we were very positive till a few months back, but we have reduced most of the positions there. We believe that the auto story, large part of it is played out. The underperformance of 3 4 years prior to 2022 and all that has now played out in this year. Catch up, the company's performance has already happened, and therefore from here onwards, auto sector will be uh, mm, probably market performer or even slightly less because most of them already been factored.
Okay, the auto story may have played out for now. That's the view then. But what about banks? Margin pressure is likely to persist in the second quarter. So within the financial space, where do you spot an investment opportunity now? Would you play it through gold NBFCs, given the fact that we've seen gold march to record highs? How's the risk reward really looking like for some of these gold loan firms, the likes of Manappuram and Muthoot? Would you play the entire financial space through these stocks?
No, you see, gold financiers are doing very well and likely to do well. Numbers will be good from their side. But the problem is that it is all in the price. So the risk reward ratio for entry at this point is not in your favor. Somebody would have bought 6 months, 1 year back, it would be good, and they can continue to hold for it also. But to for the new entrant, I think this is not because it has already played. Second thing is taking a call on gold price. Now, gold price is all high. There are talks that it may go further high that, but to what extent and difficult to take a call. So we would, while we like gold finance, but we will get them at this point of portfolio. We are holding power financiers because we believe that power story is going to sustain for a very long time, and with space, the financiers will also be required. There are not too many financiers available for power because very long drawn. That just is very very long, no? For a power project, 5 6 years, then to start delivering. So there is a long period in that, and therefore this runway is also very large. Most of these companies are available, reasonable valuation. I would not say cheap valuation, but they're reasonable. The potential from all this renewables and new sources of energy, and they will also need financing ultimately. So power finance is clearly up now. Bank side, we are slightly cautious as of now. We don't own any of the banks right now, mainly because we believe that once growth is a challenge, sector funds is a challenge till the time RBI starts easing out. Probably in December, we don't know what will happen after that. So we will is on the asset quality. Some issues have started emerging, or some uh, red signals are coming. So we wait to pan out. Stocks in any case, stocks are not bank stocks are not, so it's not that they are available at value. So there are other sectors, other opportunities. So as of now, we are underweight.
We'll have to, end this conversation here, Daljit. But I hope to get you on a better line next time around and have a longer conversation with you. I would like to thank you for taking out time and joining in. Always a pleasure chatting with you, and love to have your insights on the show.
Thank you.
Well, with that, of course, let's take a look at what the markets are doing. In fact, the sell-off has kind of deepened. The Nifty, in fact, is now down over 100 points. So it's a triple-digit cut coming in on the index. It's slipped below that 24,900 mark as well. Sensex as well down somewhere around 200 230 points or thereabouts. The Nifty Bank Index is also shedding weight, 0.5% lower on that index. But I think it's the auto pack that's the big culprit today. Just want to see how much of a fall we are witnessing on the auto pack. Bajaj Auto, of course, big drag, 8% cut coming in on Bajaj Auto. The Nifty Auto Index is down 3% as we speak. This is the major culprit that has led to the Nifty falling below that 24,900 mark. Bajaj Auto, by the way, is down almost 10% as we speak, and the top 3 laggards from on the Nifty are from the auto pack. Hero Moto, Eicher Motors, Bajaj Auto, these are the 3 top losers. Aside of that, Maruti, M&M, all of these counters are witnessing intense selling pressure, 2 to 10%. That's the kind of sell-off coming in on some of the auto names. So yes, not looking pretty, and it's the weekly expiry as well. So there will be a fair bit of volatility and caution as well. But Nifty Auto Index, that is not making things easier when it comes to the benchmarks. But with that, we are completely timed out on this edition of Opening Bell. Thanks a lot for tuning in. Of course, come back and join us for Closing Bell at 3:30 p.m. as well. Hope the texture of the market improves by then. But for now, not looking good. The Nifty Mid Cap Index is also down almost 1% or thereabouts. So yes, brace for an extremely volatile day on the index. So it's me signing out now from me and the entire team. Thanks a lot. Stay tuned and stay tuned to Money Control, in fact, for all your other news and updates. Have a great day.